If you've watched any video about retiring in Portugal in the last 2 years, the numbers they gave you are out of date. The tax break that made Portugal the obvious answer for American retirees, it's gone. And most YouTube channels haven't updated their math. I'm not saying Portugal is a bad choice. I'm saying, before you book that scouting trip, before you talk to a visa attorney, before you start telling your family, you need to know what the actual numbers look like in 2026. That's what this video is. We're going to take one couple, same income, same 401k, and run their money through Portugal's current tax system. No hype, no lifestyle shots, only pure value for you. By the end of this video, you'll know exactly what Portugal costs an American retiree today, and you'll be able to decide for yourself whether it still makes sense. Let's start. For years, Portugal had a program called the Non-Habitual Resident Regime, NHR for short. Here's what it did. If you moved to Portugal and qualified, you paid a flat 10% tax on your foreign pension income for 10 years. 10% flat. On your Social Security, your 401k withdrawals, your IRA distributions. For an American retiree living on $3,500 a month, that was a massive deal. The math just made sense. Then, on January 1st, 2024, Portugal closed NHR to new applicants. Portugal replaced NHR with something called IFICI. Some people call it NHR 2.0. But here's what you need to know. IFICI is not for retirees. It was designed for researchers, scientists, tech workers, startup founders, people working in innovation and R&D. If you're 58, planning to live on Social Security and 401k withdrawals, IFICI does not apply to you. So what does apply to you? Portugal's standard income tax system, progressive brackets, rates that go from 13% at the low end to 48% at the top. That's the reality in 2026 for a new American retiree moving to Portugal. Let's put a real person in this scenario. Meet Sarah and David. She's 58, he's 60, they live in the Bay Area, and they've been thinking about Portugal for 3 years. Their combined income in retirement looks like this. Social Security, $2,800 per month. Sarah's benefit only. David hasn't claimed yet. Monthly 401k withdrawal, $700 per month. Total, $3,500 per month, $42,000 per year. They own no property in Portugal, no other income sources. This is a very common profile for an American couple considering a move abroad, and we're going to walk through exactly what their tax bill looks like. First, let's talk about the US side. Because Americans pay US taxes no matter where they live, that doesn't change when you move to Portugal. Most people assume they're going to owe a lot, but the numbers tell a very different story. The IRS has a formula called combined income. It determines how much of your Social Security is taxable. Here's how it works. Take your other income, add half of your Social Security benefit. That's your combined income number. For Sarah and David, 401k withdrawals are $8,400 a year. Half of their Social Security is $16,800. Combined income, $25,200. Here's the key. For a married couple, Social Security only becomes taxable if that number goes above $32,000. They're at $25,200, which means their Social Security isn't taxable at all. Zero, not a dollar. Now, they still earned $8,400 from the 401k, so we take that and subtract the standard deduction. For a married couple in 2026, that's $32,200. They earned $8,400. The deduction is $32,200. Their US federal tax is zero. Most people moving abroad assume the opposite. Big Social Security, big US tax bill. At this income level, the standard deduction alone covers everything. The US side is settled. The only real question is, what does Portugal add on top? Here's where it gets interesting, and where the details matter. Under the US-Portugal tax treaty, Social Security benefits are taxable only in the United States. That means Portugal cannot tax Sarah and David's Social Security income. Their $2,800 per month in Social Security, Portugal does not touch it. This is actually a significant protection that most people don't know about. The treaty is clear on this point. So on the Social Security side, zero US tax, zero Portuguese tax. Now for the 401k withdrawals. This is where the post-NHR reality becomes concrete. Private pension and retirement account distributions, like 401k and IRA withdrawals, are treated as Portuguese income for a Portuguese tax resident. Sarah and David are withdrawing $700 per month from their 401k. That's $8,400 per year. Here's something that most people miss, and it actually works in Sarah's favor. Portugal exempts the first 4,104 euros of pension income from income tax. That's approximately $4,500. So their taxable amount in Portugal isn't $8,400. It's the portion above that exemption, roughly $3,900. On that amount, Portugal's lowest tax bracket applies, 13.25%. Their annual Portuguese tax bill on the 401k, approximately $500 per year. That's it. The 48% top rate gets thrown around a lot in articles about Portugal. At Sarah and David's income level, it never applies, not even close. They're in the first bracket, with a significant exemption working in their favor. So to be clear, this is the real post-NHR reality, not the horror story, not the 48%. $500 a year on a portion of their 401k withdrawals. So let's put the full picture together for Sarah and Portugal in 2026. U.S. federal tax, $0. Portuguese tax on 401k withdrawals, approximately $500 per year. Total combined tax burden, roughly $500 per year, or about $43 per month. On a $42,000 annual income, that's an effective tax rate of about 1.2%. Is that worse than NHR? Yes, under the old system, Sarah would have paid 10% flat, but on a smaller taxable base. The headline rate has gone up, but the actual bill, because Social Security is protected by treaty, and because the pension exemption reduces the taxable 401k base, is still remarkably low. $43 a month. That's the post-NHR reality for someone at Sarah's income level. Not the catastrophe the headlines suggest, not the 48%, just $43 a month. Is it more than zero? Yes, but that's not the right comparison. The right comparison is what Sarah would pay in the US, and at her income level, in many states, she'd pay more just in state taxes. Here's the honest answer. Portugal, in 2026, is still a compelling option for American retirees, but for different reasons than before. The tax advantage is largely gone for people without NHR status. That part of the story has changed. What hasn't changed? Healthcare. A couple in their late 50s can get solid private health coverage in Portugal for around 250 to 400 euros per month. In the US, the same couple is paying $1,500 to $2,000 per month before Medicare kicks in. Cost of living. A comfortable life in Lisbon or Porto runs $2,500 to $3,200 per month for a couple. In the Bay Area, that same lifestyle costs 2 to 3 times more. The D7 visa. This is Portugal's passive income visa, and it's still very much available. Sarah qualifies. $1,000 to $1,500 per month in passive income is enough to apply. Quality of life. Safety, walkability, healthcare access, European culture, these are real. So the question isn't, is Portugal perfect? The question is, does the full math, tax, cost of living, healthcare, visa, work for your specific situation? For Sarah and David, at $3,500 per month, with a tax bill of $43 per month, Portugal is still on the table. But it's no longer a slam dunk the way it was when NHR existed. And anyone who's still telling you it is, hasn't updated their math. If this video gave you a clearer picture of what Portugal actually costs in 2026, that's exactly what this channel is built to do. Every week, we run the real numbers on retirement abroad. No lifestyle content, no vague advice, just the math, for a real person with a real income. Next video, we're doing the same exercise for Panama, because Panama's tax situation is completely different from Portugal, and the numbers might surprise you. If you want to see that comparison before you make any decisions, hit subscribe. And if you know someone who's been watching Portugal videos from 2022 and 2023 and thinks NHR is still available, send them this video. The math has changed. They should know. See you in the next one.